and we had been telling people banks would still lend as long as you showed that you've got a trend that's coming back to pre-pandemic levels. And you and I and our firm are dealing with that every day, right? I mean, we're seeing so many companies with financials that have been significantly impacted, but they're showing some recovery. And the bank's true to their word of looking at these deals and financing them.
Yeah, they are. And it's interesting because as we've seen, there are plenty or a number of businesses that are still thriving and have thrived throughout the pandemic, and depending on the industry and their business model. But as you said, there are numerous ones that have suffered, especially during the lockdown period from last March through May or June. And so as the banks analyze these businesses and go into the cash flow, they're all about having to prove up the debt coverage for the last year, especially the last taxable year. And if there is such a downward amount of revenue and cash flow for 3, 4, 5 months of the year, that's going to make that really tough. The banks have proven up that they will look past that if, as you said, the trends are back to where the revenue was pre-pandemic, or at least enough to establish enough cash flow to cover the debt. And when we talk about the trend and looking at a trend, it can't really just be a month or two. It's got to be 4, 5, 6 months so that you can readily see that it's really back on track. But that shows the flexibility, and the banks are willing to take that into account and go ahead and move forward with the deals. So it's worked out all right so far.
Yeah, I mean, so look, that's great news for buyers who need to get access to lending in order to buy a business, and it's great news for sellers so that they can walk away with a good majority of the transaction in cash at the closing table. But that doesn't mean that there's not still some risks and that the deal structures might be changing. And you and I had talked about this. Buyers are going to be more cautious. They're going to have to do more diligence. They're going to have to really be comfortable that the business is coming back. And the deal structure might change in the sense that, if you've got a $3 million deal pre-pandemic, the seller might have walked away with 90% of that cash at closing. But now maybe there's, an earnout component that's layered in there to make sure that the business really does rebound, and that this isn't just a short blip on the radar. And we know that the SBA will deal with that, deal structure as long as the earnout can only go down and not up.
Yeah, the earnout, quote unquote, is an interesting thing. And we've talked about this many times. And the one thing that gets the banks a little more comfortable anyway, besides an earnout per se, is a seller note. And so you've got the 10% down of the usual structure, and then maybe a 10% seller note. And that's maybe 90% of the deal structure that we're seeing. The earnouts, and if you want to get into that a little bit, or the negative earnout within the auspices of a seller note to accomplish some triggers that will allow you to pay less to the seller under the terms of the seller note. So it's a negative possibility in terms of payment to the seller if the triggers aren't met. Can't be a more than the purchase price allows for in a regular earnout situation. Yeah. But one of the other things, just real quick before I forget, that the banks are looking at in this post or existing COVID environment is, in addition to the trying to understand the trends, they're going to ask for the monthly P&Ls for 2020 and going into 2021, and probably the comparative monthly P&Ls for 2019, so that they can assess, especially seasonal businesses, is this really where it's back to where it needs to be? So I would just point that out there.
Well, and I think it's a good point because business owners need to understand that they can't just produce annual and quarterly financials anymore. It's going to be imperative that they close out every month and that they produce monthly statements that are accurate, which means you've got to get the books reconciled and months closed, which is, normal in any business. And a lot of folks don't do that, but that will be a requirement going forward. So I think that's a great point.
Yeah, really important.
All right, well, good. So, I mean, the good news is, to put a cap on this discussion, is banks have the appetite to lend. There's plenty of buyers in the marketplace. If you've got a business that's rebounding, there's a good chance we can get a loan. It may take some, different sort of deal structures, but it's not like lending is shut down. There's
No,
hope. You want to sell,
not.
you want to buy.
And I would also mention one other thing that we haven't really talked about in terms of these CARES Act benefits, and partially because I'm not sure it makes a ton of difference, or at least the bankers are not saying it does, but the government, the SBA, guarantees the banks a portion of their exposure on these deals. That's one of the reasons they do absorb all this goodwill, and it's not about collateral, it's about cash flow. And historically, that percentage for these acquisition deals is 75%. So the bank's getting a government guarantee for 75% of their exposure.
Yeah.
The CARES Act has raised that up to 90%. Now, you say to yourself, well, gosh, they got a 90% guarantee. They should just lend every single deal.
Yeah.
But banks, being the conservative bunch that they are they know it's there, but it's not incredibly changing their approach.
Yeah, and if they do bad loans, they're going to get audited, and they could lose their preferred status, right? And so they can't just because there's a 90% guarantee, they can't just go out and do bad loans, right? So they still have a fiduciary to the SBA to do quality loans.
Right. You would hope that encourages them at least a little bit more to do a deal that they might be on the fence about, but we don't know that.
Yeah. Well, I don't think we would have the CARES Act 2 and some of the programs that are out there that we're going to talk about here if the government didn't want to see lending happen, right? But banks are still not going to be, they're not going to get too far out on a limb. They have to see some good fundamentals. So
absolutely. Yeah.
All right, great. So let's dive into this example that I referenced in the opening here, where we're going to lay out a typical $3 million deal